Hey, welcome back to YT Finance, and today we are talking about Nano Dimension's NNDM stock news and why Cathie Wood still holds NNDM stock in her ARK Invest ETFs. We will also discuss when Sensionics FDA approval is going to be announced and how that will cause their stock price to double. Then lastly, we will disprove a bearish article on Palantir Technologies while providing the newest PLTR stock news. Go and press the like button right now for more NNDM, SENS, and PLTR stock news updates. Comment down below which of these stocks that you own, turn on all subscription notifications to stay informed, and now let's get right into today's stories. Cathie Wood of ARK Invest, who is a very well-known and prominent investor, has had major success by picking highly innovative and industry-disrupting companies to put into her ETFs. One of her most famous ETFs, which is the ARK Innovative ETF, ticker symbol ARKK, has a 1-year return of 22% and a 5-year annual average return of 40%. Cathie Wood loves picking companies that have great growth prospects, and the three that we will look at today in her ETFs are Nano Dimension, Teladoc Health, and Twitter. Let's start with Nano Dimension, which is a company that creates 3D printers that can produce multi-layered circuit boards and other high-performance electronic devices. Normally, if a company wants a custom circuit board, they will have to contract a manufacturer for a mass quantity of them, and the creation process, shipping, and costs are very high and will take very long. But with Nano Dimension's printers, companies can print their own high-performance electronic devices as needed for a fraction of the cost and time it takes traditional manufacturers. In the first half of 2021, Nano Dimension generated $1.6 million in revenues by selling printers that range from $50,000 to $100,000. The amount of printers that they sell are relatively small, but they want to eventually make most of their revenues from selling the inks to their printers. Currently, their operating expenses for the first half of the year was $30 million, so clearly the company is not profitable yet. However, they do hold around $1.4 billion worth of liquid assets on their balance sheet, which will buy them enough time until they become a profitable company. Investing into NNDM stock above $5.40 is a speculative long-term play, but Cathie Wood seems to accept the risks associated with this company. About 2% of the ARKQ ETF consists of Nano Dimension shares, and Cathie Wood still plans on buying more of these shares when they are at a discount. Next up, we have a Cathie Wood favorite, which is Teladoc Health, which provides patients access to medical staff through video calling services. This company has minor competition in this space, and they are one of the clear market leaders. Teladoc has even acquired 2 other companies to increase their market reach and expertise in the area of health, so they can be the best company on the market. However, recently their shares have struggled after word spread of Amazon entering this space, so the stock price has fallen around 55%. Despite the stock price falling, the company is doing very well. They reported $957 million for the first half of 2021, which represents a 127% increase year over year. However, their expenses grew by 150%, and they had $333 million of losses. On the other hand, the company projects revenues of $2 billion for 2021 overall, and this company makes up more than 6% of the ARKW ETF. Next up, we have Twitter, which is another one of Cathie Wood's largest holdings, which makes up about 5.5% of the ARK Next Generation ETF. Cathie increased her Twitter shares substantially in September after the company implemented that you can now tip content creators in Bitcoin through the platform. Some analysts even say that Twitter is the ultimate cryptocurrency stock play. However, I think that there are other options for cryptocurrency plays out there that are better than Twitter. However, Twitter is a very good one. Twitter also brought in more than $2.2 billion worth of revenues for the first half of 2021, which is almost a 50% increase year over year. Twitter also landed $134 million of profits, which is a fantastic sign that they are on the right track. But with that being said, Twitter's management said that the number of daily active users is not supposed to increase or change for the rest of 2021. More good news is that Twitter is supposed to beat revenue expectations for Q3 of 2021, and the stock price has reflected this by increasing more than 35% just in a single year. Twitter's price to sales ratio, which is 12, compares very nicely to that of Pinterest, which has a PS ratio of 15, and Snapchat, which has a PS ratio of 35. So Twitter's valuation is much more in line compared to their competitors, which is always great news. Now let's talk about some Sensionics SENS stock news. We are all currently waiting for the FDA approval for their continuous glucose monitoring system for people with diabetes, and it's their 180-day system. And once this approval goes through, the SENS stock price should pump pretty substantially. Recently, the stock price has been on a rapid decline because in February the price was around $5.27, but now the stock trades at around $3.30, which is around a 37% drop. So when is the FDA approval coming, and when will the SENS stock price double? Well, luckily, the CEO, named Tim Goodnow, indicates when the FDA approval is supposed to be coming out, and let's see what he says, and I quote, "We continue to expect the approval of the product by the end of 2021, which means he thinks that the FDA will approve this product in less than 2 months. He goes on to say, though the constantly evolving situation with the pandemic and its impact on FDA workload make it hard to precisely estimate regulatory timelines. End quote. So this just means that he has a very good indication that it's going to come before the end of 2021, but because of regulatory complications because of the pandemic, it might be slightly later than that because it's hard to pin down. Some analysts even believe that the SENS stock price will follow Dexcom's success, which also develops CGM systems like Sensionics, and they're estimated to bring in $2.4 billion this year. Currently, Dexcom trades at 22 times its sales, with a $52.68 billion market cap, and Sensionics stock could be trading similarly to that multiple when its 180-day CGM system is FDA approved. The current revenue forecasts for SENS is $32.7 million by the end of 2022, which is a 134% increase year over year. But the best part is by 2026, the company is projected to be making $238 million of revenue annually. According to 5 TipRanks analysts, the average price target for the SENS stock is $4.13, but when we look at Seeking Alpha analysts, they have 8 analysts with an average price target of $3.46, and one has a 25% increase from today's price, and the other represents a 4.8% increase from today's price. In other news, a major firm, which is the Alaska Department of Revenue, recently sold most of their shares of GameStop and recently bought up Moderna and Palantir shares as well as Analog Devices. Now, you all know that I love Palantir stock, and I also own this company and this stock personally, but this is a long-term stock play in my opinion. I will continue to hold my PLTR shares even when the market gets volatile, which could negatively impact the stock price of PLTR. While Palantir is a great growth stock to own, there is a lot of hype baked into this stock already, especially because their valuation is so high compared to the revenues that they're bringing in. However, I still believe that this company and the stock has massive growth potential. Right now, the PLTR stock has around a 145 price to earnings ratio, or multiple if you will, which means that investors are anticipating massive growth because they are willing to pay such a high premium for this company. However, if Palantir does not live up to this hype, the stock price could crash pretty aggressively. The current stock price is trading at around $24 per share, and it does have strong support levels, so hopefully we can see another rally before another price drop. According to Barron's, a Citigroup analyst says that Palantir is hard to quantify and it's hard to determine what the company is truly worth. And this sentiment is echoed by a William Blair analyst who made similar comments about the company as well as the stock. However, I think it's relatively easy to predict their fair value price, and I have stated that before because according to Morningstar analysts, Palantir is worth at least $28 per share. So I think if the average price that someone has is below $23, they should be in a good position for the long haul of owning the stock. But again, that's just an opinion, and that's just what I'm following. You should always do your own research and due diligence because other analysts out there disagree with me. The author of this article says between $10 to $15 per share is what Palantir should be trading at right now. However, I think that is way too low. Palantir is a big data and analytics company, so they will naturally have higher multiples and ratios than other stocks, and the stock price of $10 to $15 would be a fantastic buying opportunity in my opinion, so on the off chance that this reporter and author is correct, I will certainly be averaging down my cost for PLTR shares. PLTR has also outperformed the market indexes lately because Palantir has increased by over 1% and the S&P 500 as well as the Dow Jones Industrial Average have both increased less than 1%. Also, Palantir has outperformed its peers who are in a similar sphere in industry, such as Tyler Technologies as well as Cognizant Technology Solutions. But what do you think? Like this video right now if you haven't already. Comment your thoughts down below on Palantir, Sensionics, and Nano Dimension. Turn on all subscription notifications to stay informed, and I will see you in the next YT video.